Hey, what's going on YouTube? So today I am actually going to show you my M1 Finance portfolio and investing over $1,000 in one single take. So this is actually the largest amount I've ever put in at one given time. So I'm going to show you all the different stocks it bought into, how much it bought into them. Also, some of them I did manually as well too. So if you're not too familiar, the platform I'm using is called M1 Finance, but essentially we're just going to kind of show you all this stuff. So I figured let's go ahead and take a look at how the portfolio is doing, kind of get some ideas. Right now, you can see the total value of the portfolio is at $37,050. This is the highest the portfolio has ever been, so I'm really excited to be hitting that new milestone. Hopefully, it keeps moving forward. We can hit 40,000 sooner rather than later, and just see the the impact and the compound interest just really take effect in this portfolio. So you can see in the last day, right over here, we had about a $70 return. If we look at the week, had about $187 return. If we go to the month, we're still down a little bit for the month, about $498. So no worries there. Most of our stocks are pretty much kind of coming back here. If we go to the quarter, we're actually still up $2,300 in the quarter. This is why I like dollar cost averaging and essentially just buying in when I can, because sometimes we're going to have the market being up, sometimes the market's going to be down. And then in the last year, we're actually up $4,781. 371 of which is dividends that we earned and had it reinvested in the portfolio. If we go to our all time, we're actually up $5,660. I think for the year. So the year obviously puts us back in June 8th. That's probably, you can see there, our portfolio was around $6,000. And at that point, we're really starting to get a good foothold of how this portfolio has kind of been at this point, because before this, if we go to my all-time, we started off with $100. I always like to show people that, just because for a lot of people when they get started with investing, they always freak out of like seeing $37,000 in a portfolio, thinking I can't get there. But hey, I put in $100. That's actually the minimum to open up with M1 Finance. Which, if you do want to sign up, I'll have a link for them in the show notes down below. It does help support out the channel, but it gets you $30 when you sign up and make your deposit into the account. But the nice thing is I also have tutorials down there too. So if you want to learn how to set up your account to look just like mine, make sure I'm in the screen here. So if you want to make sure yours looks like this, I'll have links down below for training if you guys want to learn all about that. But to go back here, during this time frame from, I think it was like June 23rd until about, I would say maybe April, May, actually maybe even further than that, like maybe June, July, I was still kind of like buying and selling different stocks, trying to figure out how I wanted my layout to be with my portfolio. So I was doing, a lot of buying and selling, kind of moving my portfolio around. But then, definitely I would say around July, August, my portfolio really kind of just stayed put as far as what was in here, how much I've had, and just keep growing from there. So a year ago, which is crazy to think, I had over $6,000 in this account, and now we're sitting at $37,000. So, it just comes with time and effort and constantly investing into this. But let's take a look and see what I invested with here, because as you can see right over here, we did a deposit for $1,000. That is, again, the most I've ever put in one single time. Now, I think there was at some points when the market was taking big dips that I was depositing like 200 here, 400 there, and maybe within a week's time, I maybe put in that much, maybe a little bit more. But in one go around, this is pretty significant. I mean, I started off with this portfolio. Let's actually go ahead and date this back here. Like I said, I just started with $100. You can see right here. Then I deposited stuff like $20 and another 20, then $10. So being able to put in this much, is really nice. Obviously, I would not have done it at the beginning because I was trying to learn the portfolio and trying to figure out where I was going and how it was going to be and everything like that too. So let's go ahead and take a look here. So these are the 20 buys. So I have 23 stocks in my portfolio. So out of all the stocks I have, only 3 of them didn't get purchased with this $1,000. And the reason for that is because of the percentages of how they are in my portfolio, which is totally fine. I can also do manual trades, which is what I did. So anything with like an almost exact amount, usually those things were manual. So let's take a look here. So out of the $1,000, we had about $6.02 go into Discover. Haven't been buying a lot into them. They are really up on my portfolio, so anything I buy is really moving the needle with my dollar cost average. You can see here Lockheed Martin, we had $26.65 go in. I did a manual buy into Airbnb for $40. The funny thing about this one is I'm still dollar cost averaging down because their stock is down right now as of this recording. And I am now like just $3 shy, at least of the price that they are right now, $3 shy of having over 15 shares of the stock. So I might end up just like doing like a small deposit to be able to get to that. Then we can see right over here, ADP, we have $70 that we put in. That one I also did manually as well. And then let's see here, we have Ally for $9.98. Next Era Energy, we did $99.39. Actually, can I zoom in a little bit? I can. Oh, I can zoom in a lot a bit. All right, so then we have Apple. Apple we did $20 with. What I like to do too, sometimes like if I look into like Next Era Energy, you could see here the price point that we paid, so $72.46, which is I think a little bit lower than where our dollar cost average is. So this actually dropped it down. And then you can see the quantity of which they bought it. So that was for $1, or not $1, geez. That was for a quantity of 1.37 shares. So that was pretty nice. It takes me back out here. So then we had Apple. We did put in $20 manually with Apple. We bought it at $125. So we got about 0.15 shares right there. Takes me all the way back. I don't know if you guys want me to go like in depth with these. So let me know in the comments if you prefer me to like just click in here so you guys can see all of this. So with like Ross, we put in $59.41. The share price was $119.50. So that bought us almost half a share. Now, the unfortunate thing with Ross is their ex-dividend date was on the 7th. So buying into it at this date, unfortunately, does not give us enough to be, or wasn't enough time to qualify us for the dividend that's getting paid out soon. So we missed out on the mark for this one, but I think I did a buy a couple days prior to it just to be able to get a little bit more in there right before the ex-dividend date. But nonetheless, we still got in, so the next dividend afterwards we will be able to buy in. DLR, we put in $20. This one was a manual. We put in that 20, so we got it at a price point of $157.25. So that gave us a share quantity of 0.12, which is nice. Maybe I go through the rest of these ones up here really quick. See, Discover, we bought it in at $124.04, gave us about almost 5% of a share, which is good. So I'll go through all of these. I'm gonna go back down here. So Lockheed Martin, we put in that $26.65. Price point is $395.32. So that bought us in 0.067. The nice thing with this one was a couple of weeks ago, actually a couple months ago, I should say, at this point, I was actually down pretty significantly with Lockheed Martin on my portfolio. I think I was down almost 10%, but I kept buying in. And so now the price point is way high, where if I bought in even more, it would have been really, really nice growth there. But nonetheless, that's why I like buying my shares of stocks that are down on my portfolio because of that, which is like what I did with Airbnb. You can see their current price point is $148. I put in that $40, so that got us just over a quarter of a share. So that helps lower the dollar cost average on there. I think my dollar cost average is $167. So it's getting close to either, essentially I'm kind of doing two things. As the price is hopefully going back up and my price point right now is going down, that'll meet pretty nicely, so that way when the stock hopefully goes back up, we will see some really good gains there. ADP, I put this one in manually. Their ex-dividend date is coming up soon, and I wanted to actually have more ownership of ADP as well, so it's kind of a nice double win there. Their current price point when I bought it was $197, so that brought 0.35 shares of the stock, which is nice. And then we have Ally. This one was based off percentages, so $9.98 went in there. Price point on this one is $55.40. When I originally bought into Ally, I think my average was maybe, I think it was like 28 or something like that. Something crazy low. I wish I would have bought it more, but you just never know. So that bought us in at 0.18 shares, so 18% of one share, which is not bad for $10. We already looked at Next Era. We already looked at Apple, Ross, DLR. So next up is NRZ. So this one we put in $40. This one was a manual purchase at $10.89. This bought us 3.67 shares. My goal with this company is to get to 100 shares, or at least right over 100 shares, and probably hold off on any more purchases. It's actually done really well for my portfolio. It is much higher risk, for sure, but having a little bit of risk is not too bad in a portfolio when it's a small percentage. Like, it's pretty small percentage overall, but yeah, I think we're really close. Maybe I'll go in there if I can remember to see how many shares we actually have. And then next up we have AbbVie. So we put in 47.25. Share price is 112.79. So that bought us in a quantity of 0.41 shares right over there. So not too shabby. Oops, that was the order fill. Then we have Amazon. So Amazon, we I put in $40. So this one was not a manual. This one was an automatic investment. You can see the share price is $3,198. So that bought in at 0.0125 shares. So that is about 1%, a little over 1%. That is 1.25%. Ooh. So the funny thing is, obviously, if you are a shareholder of Amazon, I think over the last like 8 months or so, it's been relatively flat. And so I've looked at their history before too, and it tends to have this like really nice spike every like little while after it's been flat for so long. So hopefully we're getting in at a good price point still, and then that stock price goes up again, and then we'll be in there already. We're getting close to one share. I think we're at 0.67 shares. Yeah, so 6-7 shares, 0.67 shares. Let's get in there. So next up we got Square. This one I did buy in manually. Right over here, share price is $213.52. So we ended up getting about 9% of one share. So that's not too bad there. And then next up is Google. So this one we put in $39.98. Share price is $2,450.99. So that bought us in at 0.016 shares. So yeah, a little over 1.5% on a share. Getting really close to this one, getting a full share as well too. Obviously, with massive price points like this, I can't buy in all at once. Even if I put the full $1,000, that wouldn't even be a whole share. Like, that's so crazy to think about. So for me, I'm at 0.80 shares overall. So I'm getting close to one full share with Google. So I'm pretty excited about that. It's not very significant to hit the full share necessarily, but it's just like meaningful to me, just in general for that. And then let's see what we got here. We got Texas Instrument. We put in $33.87. Share price is $189. So this one bought in at pretty much 18% of a share. So it's 0.18 at that point, which is good. This is actually my lowest stock in the portfolio as far as value. This one has like $600 and something dollars. I think the next one after that is around 800. So this one is significantly the lowest in the totem pole essentially. And then we have Microsoft. We put in $20 manually on this one. Price point is $251.04. So it's been doing really well for a while now with Microsoft. And that's pretty much 8% of a share. So, hey, every little bit counts, right? As we're building up, especially when you can't do hundreds of dollars all at once. Obviously, we're doing a full $1,000 in the portfolio, but a majority of that went to other stocks. But $20 in here, that's going to go a long way down the road, especially with like dividends and dividend increases. That stuff is always going to be really worth it to have your money in as soon as you can. So then we have Costco right over here. We have $76.65 that went into Costco. So this one obviously got a pretty good chunk of money that went in. You can see here the price point is $384.38 is what we bought it in at. So that was about 20% of a share. So 0.20 essentially with those numbers there. Costco's been doing all right. We don't have a lot of shares of it. Obviously, with the high price point, we don't have too many. Then we have Home Depot. This one by far exceeded any other stock as far as how much it got. So this one, based off of the percentages I have in my portfolio, this one got the most, obviously. So this one was $205.05. And then you can see here at a share price of $311.32, I only was able to get, with that much money, 0.658 shares. So about 65% of a share. That's crazy. It's a thing, you put in $200 and you don't even get a full share. But the nice thing is with like M1 Finance, since they do fractional shares, that when they pay out their shares, I'll still get fractional pieces based off of the fractions that I have of a share. So that I really, really like. Next up, we have Starbucks here. This one got the second highest, I believe. It was $98.88. Share price is $111.77. That in itself brought in 0.88 shares, so about 88% of one share. Starbucks in my portfolio has been doing very, very well. And then next up we have, that was the second highest, because then after that it was Costco. So these three are in the same sector in my portfolio. I think there was one more that was part of it too. Ross is part of it as well too. So we had those four in the same one. So those ones got the most because I had the biggest percentage that I wanted to go into that sector. So then next we have Johnson and Johnson, 2674, price point of 166.19. That brought in 16 share or 0.16 shares, so 16% of one share in the portfolio. So looking at those, you can see here with $1,000 with 20 buys, like this is one reason why even at 23 shares of like companies that I'm holding sometimes feels like a lot, because even with $1,000, it seems kind of strange to be like, oh, that one only got $10, or this only got $40. Obviously, $40 is still a lot. $20 is still a lot to go into a company, because the way it's going to compound and continue to grow, every little bit it's gonna have an impact on the portfolio. But I figured that if I had, let's say, only 15 companies that I had in my portfolio, well, then that $1,000 will get split up a little bit more with each company, and I'd have more shares of each one, which is something that I've thought about before. Let's go ahead and make sure I'm like zoomed out a little bit. So let's go into the holdings here. So yeah, with 23 shares or 23 different positions that I have, yeah, like not every company is getting, a good share of them. You can see like Apple's the largest, has $4,261 in value. And then my lowest company, which is Texas Instrument, like I mentioned, that one has 664. So a pretty large difference, but it does help me keep my portfolio diversified a little bit. So I'm sometimes debating on like, do I want to get rid of more companies? Do I want to hold on to these? I definitely don't want to be adding more companies. And if I do add more, I for sure want to remove others. And I've done that in the past recently, where if I've bought a new company, I sold out of something else to kind of counteract it. Just because even at 23, like I said, it just sometimes feels like I'm not getting a ton of shares of these companies, because, I believe in Apple, I believe in Microsoft, I believe in Airbnb, NextEra Energy, a lot of these companies, but I also want to make sure I have good like shares into these companies, because like right now, I'm almost at 100 with this company, like I mentioned, so it'd be really cool to hit over 100. But thinking about Apple, I have 33 shares. That's significant. That's cost basis was $3,800, almost $3,900. Like that's a good chunk of money to put towards one company. But it's like, only 33 shares. It'd be really nice to at one point get 3,000 shares, or somewhere in that like ballpark of having thousands and thousands of shares of one company that you believe in for long term. Earning those dividends if they do pay out dividends, getting the dividend increases, getting the gains on those companies because they are, constantly innovating and moving forward. Those are the things I'm kind of thinking about sometimes, as far as like, do I want to keep on sticking with 23 companies, or do I want to kind of shave some of these companies off and kind of, streamline it a little bit more? So it's tough, but that's the beauty of investing. And I've kind of mentioned that before too, is that you can change your mind. If sometimes you want to have, all these sectors, you can. Sometimes maybe you want to just have 4 stocks in your portfolio. Like, more power to you if you can do that. Diversification is key. But one thing I do like to tell people is that this portfolio, this 37,000, this is my account. So that way, when I'm in my mid 40s, I can use this for things that I want to have fun with, whether it's like travel or, I guess I was going to say travel or vacations is kind of the same thing. But those are that's the big focus I want to have, is like, this is so I can go do things that I want to do without the worry of funds. If I want to go on an Alaskan cruise, or if I want to go explore like South America, or just go anywhere in the world, this is going to be the fund that I can go ahead and do that with. So it's like, do I want to be a little bit riskier? Because I also have a retirement account with Vanguard, and that one's very solid. Follows the S&P 500 index fund, so it doesn't really have a lot of risk the same way as this one does. This one has only 23 companies, so the risk is definitely much higher, but the reward could be higher if these companies end up doing very well. Now you can see here my unrealized gains is about 4,300, which is up about, what is that? Almost 13.4%, which is nice. But obviously, with the market having kind of somewhat recovered from the dip that it had earlier, I think at one point I was up like 22% or 23%. If I go back to old videos, I could probably see that happen. But those are kind of the things I had to consider. And when you're looking at investing and trying to go through this process of like, okay, well, do I want to have this for the long term when I retire? Because if this stuff is for retirement, that's one thing. But if it's for something in the next 15 years, that's a whole other thing I got to consider and think about, and like which way I want to go and how I want to like perceive, these different companies as far as like, do I want them to be, companies that are growing exponentially, or do I want it to be where these companies are growing pretty modestly, but they're not as risky? Because like right now, out of all my companies, I would say Airbnb is probably one of the riskiest stocks I have in this portfolio next to Square. Now, there are good projections for these companies to do very well long term, but that, there's no guarantees. I mean, there's also no guarantees that like Apple or Microsoft is going to be here in the next 5 years or 10 years. The likelihood of something happening in that time frame is not as significant. But I mean, we've seen companies like Sears and J.C. Penney and all these different companies take big hits over the years. So is that something that can happen with these, or something like Amazon? I mentioned that they've been relatively flat for a while. What if that's it? Like, what if Amazon doesn't have any more of that great growth that it's had in the past? And sometimes that can happen with companies where people don't want to invest anymore because they feel like they missed out on it. But maybe there's still some, gas in the tank to be able to continue to go forward. We just don't know exactly. Obviously, we can, research, plan, kind of look for signs of something that tells us one way or another which way the company can go. But I think long term, it's all about, what's your risk tolerance? How do you want to go about it? And for me, this is what I do like. I like about 23 or less positions in my portfolio, but sometimes I'm really considering, okay, if I were to get rid of one of these companies, which one would I want to get rid of? And the funny part is, if I go to my unrealized gains, so we can see here, like Discover, I'm up almost 122% on. Ally, I'm up 65%. Google, 30%. Tesla, up 27%. Obviously, they still have their big dip that they've gone through and whatnot. But, all these things I got to consider, like, do I maybe want to sell Discover because they're hitting all-time highs over the last couple of weeks and months? Like, is that time to get rid of them and then, buy more into, like Airbnb or Nextdoor Energy or even Square? Because currently those are down on my portfolio. Like, those are the things I have to think about and like consider if I do get rid of companies. Do I want to get rid of the ones that have already done really well and I can take my profits and then reinvest them in the companies that are in the red still? Because I'm not afraid when companies are in the red. I don't see that, especially with Airbnb. They just got released into the market as far as being able to purchase them, which, check it out, yeah. I'm like $3 away from having 15 shares based off its current price. But, just kind of those things I have to consider getting into there. Like Nextdoor Energy, I'm down 3%, but this company has been very solid. They've had amazing growth over the last 10 years, and it's only looking like it's going to continue to get better based off of their trajectory and some of the things that they have planned for their company as well too. So the other big bonus about having less companies is having to pay attention to less companies in the news cycles and everything. Because if you're in the S&P 500 index, like VOO or something like that, you don't have to necessarily pay attention to one of those 500 companies. You just can pay attention to how the S&P 500 is doing overall. Where with having just 23 companies, I pretty much have to make sure I'm keeping up to date with a lot of these companies, what's going on with them. Like I said, J.C. Penney and all these companies back in the day when they were at their prime, like, over time, did you see those kind of things happen? And can you see that happen with companies today where maybe they're becoming less popular, or their, sales are going down, or their revenue's going down, I should say. They're not having as big of an increase year over year. Are those signs of like, okay, maybe this company is not going to have the opportunity for growth anymore. Maybe I want to move out of them. But so far, the companies I have, I really like. But yeah, that's not something I always have to think about. And hopefully you guys think about those things too, because then that gives you more perspective on like your investing and your journey, because it's okay to change your mind. It's okay to go different routes down the road. So, I always tell people, if you're following along with me here on the channel, you're obviously going to see these things happening in real time. So you won't miss out, because maybe in 3 months, this portfolio might look different. At one point I didn't have this growth slice right over here, which entails Tesla, Amazon, Google, and Facebook. So, I look at this and I'm like, oh, wow, okay. I've gained, if I, obviously sold today, about $1,200 in gains from these 4 stocks that I didn't have in my portfolio at one point. I added them in June 19th of 2020, and I put in $184 into this pie between the 4 companies, and now I'm sitting over $1,200 more dollars. Do I like that more than some of the other companies that I've had? Because if I go in and let's look at like health, for example. So in the overall time for health, with dividends included, I've gained $198. right? And I've had them since September or since August of 2019. So, and that's fluctuated a little bit because this portfolio, I think, or this slice I should say, had up to like 4 different companies at one point, and then I sold and bought into different ones, and then at the end of the day I just left it with these two. Now granted, this dollar amount, this 198, is also based off the fact that this sector is only 5% of my portfolio where the growth is 20%. So, take those kind of things in consideration as well. But still, you know, those are the kind of things that I'm like, oh, I'm glad I added this into the portfolio. And maybe later on I'll add or take away or change things up based off of my needs or desires or preferences or things that like might have changed over time when it comes to investing, because again, that's totally okay. So if you start today, if you haven't already started, the big thing about it is that don't worry about how you get started with investing. Just always know that you can be changing down the road. So if you want to start with dividend investing like I did, and then kind of do dividend growth stuff like I do now, like that's totally cool. Maybe you start off as growth but then prefer dividend investing because it's a little safer and a little bit more reliable. That's totally okay too. So whichever way you go, get started. Like I said, I'll have the link for M1 Finance down below if you really want to check them out. I absolutely love this platform. It's my favorite one by far. I'll also have those trainings down in the show notes too. So if you have an M1 Finance and want to learn everything about it, that link will set you guys up to be able to learn everything with this platform. But I also want you to keep learning here on the channel. So check out this next video right over here on the screen so you can keep on learning and growing with me. My name is Dennis, and I'll see you in that next video.